What's going on, everybody? Welcome to today's trade recap. No trades for me today, um, but I did see a couple of trading setups that I think I'd say one of them was an A setup, maybe not A plus, since we didn't have the VWAP quite in alignment, and I'll go over why I didn't quite consider it to be an A plus setup, and I missed it mainly due to human error. I had a low volume node marked out, and I just didn't extend it on my bug map, so I didn't see that I actually hit a low volume node. But this is pretty much the trade idea, right here in front of your eyes. I know it looks like a bottom tick. The entry was during the formation of this 3 minute candle. If you look at it on the 5 minute, it's during the formation of this 5 minute candle. And yeah, so I'll go over kind of my thought process, what I was looking at pre-market, right? So pre-market, I noticed we had sold off, right, a little bit. I think this was just off of, if I'm not mistaken, retail sales for Black Friday. I don't think they were as good as expected, or maybe I'm just completely off and it's something completely different. But just looking at it in terms of price action, we sold off, and looking at a higher time frame, I'll go ahead and kind of go over my bias for the day. So we were at this resistance zone, right? That if you look at it in the past, right, this resistance zone has held once, twice, technically a third time since we didn't break it with strength this day. But yeah, we actually ended up, consolidating here. This was bank holiday, Thanksgiving, blah blah blah, the day after Thanksgiving, and we actually ended up, kind of peaking above it and then selling off. So to me, it looked like we were still holding the area, right? Because if you look at it on the 4 hour, right, we're still holding. We held this 4 hour gap right above here, so it looks pretty bearish, right? But then I also noticed we had some PD arrays to the downside that could hold it pushes higher. Looking at the daily, if we remove all our drawings really quick, we noticed the wick of the daily candle actually traded into this daily fair value gap, and it held it pretty nicely. Um, so I was feeling very neutral, like completely neutral. Like I could see this go either way. Um, didn't really have a clear direction, so I said feeling pretty neutral in terms of direction. Price is bouncing between a bullish and bearish daily fair value gaps. So bearish right here, bullish right here. So bouncing between those two. And then the 4 hour didn't give me much information. Maybe if you trade support and resistance, you saw this as a break and retest of a resistance area. Because you could see this, like maybe this right here. Maybe you saw this as a potential resistance area, right? Break and retest of that. Um, but me personally, it was a neutral bias. It was kind of conflicting for me, so I just decided to stay neutral. And I will say, I feel like being at the resistance level, having that sell off that kind of confirms the resistance level still holding, made me hold back on the longs. I wanted to see displacement lower to take all these draws to the downside. But yeah, another thing that I could have done better is think in terms of the auction, right? So I had marked out my previous week's high value area, previous week's value area high, previous week's point of control, and previous week's value area low. So we're above the point of control and we're like right at the value area high. Just kind of got to watch, gauge if we're accepting value above the value area high. If we're trying to break above it and continue displacing, that's a possibility. I feel like that's something that I failed to understand or really just think of. Because thinking in terms of the auction can be pretty helpful in your trading. At least that's what I found. But yeah, that was kind of what I was seeing. I saw, you know, Truly Open, technically not traded through in London, but it did get traded through in the pre-market, and it actually ended up serving some pretty solid drawn liquidity, which is something that I didn't consider. But yeah, it ended up serving as a great draw on liquidity. This pre-market low, I didn't have it mark out because I don't know why. Honestly, I feel like that's something I should be doing, regardless of whether or not I'm like, this is convincing or not. Because at the end of the day, I'm pretty sure this is a 50-minute intermediate low. So pre-market low slash 50-minute intermediate low. Maybe no, it's not a 30-minute, but it is a 50-minute intermediate low. We barely swept up like a couple ticks, and then this plays higher. But yeah, off open, there wasn't much for me to go off of. There was this candle, and then the next one. Um, so to me, it looked like we were holding overnight VWAP, and I was like, I kind of want to see Asia and London um, get traded too before taking shorts. That would have been more convincing for me. I felt like if we kind of wicked, like this wick actually ended up forming up here, then trade lower would have been a clear idea for me. Yes, didn't take it at this time. But yeah, after this, um, we ended up sweeping barely by like a couple ticks. So like this low is at 210.75. This low is at 209.25. So that's like a point and 2 ticks. So not that much of a difference. But after that sweep, we end up trading higher. And this trade idea that comes up here looks clearer on the 3-minute chart. So this trade idea is based on a sweep of pre-market low, clearly found buyers there, also swept true day, broke above both VWAPs here. So we were holding it initially, right? We were holding it once, twice, 3 times. You can see this as like multiple retests and holding of overnight VWAP, and then we're finally breaking above it with strength with a body candle on the 3-minute. And then on the 5-minute, I feel like the 5-minute is also not convincing for me. But yeah, I should be more open to looking at the 3 minutes, especially at the beginning of the session. This is like what, almost like 50 minutes into the session. The 5-minute chart, you're gonna have like 3 candles, so it's not it's not much, right? At least for New York NYSE open, so New York Stock Exchange open, you're gonna have 3 candles for the first 50 minutes on the 5-minute chart. So yeah, and then on the 50-minute you're gonna have a single candle. So should just be more open to the idea of looking at the 3-minute. And this trade idea basically forms off of VWAP. So this is what I saw. I noticed there was a low volume node. You can kind of see it a bit of a valley there on the chart range volume profile, and then on the session volume profile, which covers like 6 p.m. reopen on Sunday, because today's Monday, up until the current time. So low volume node there, you can see it here, right? We break through it. So I was expecting this to hold as bearish, since we kind of saw failed buying at overnight VWAP, and then failed, broke through New York VWAP, and then we kind of retested this low volume node barely. So I marked that out, and then we just broke through it with strength. Didn't see continuation lower, so I was looking to get a trade here short, but ended up not getting it. And then we break above both VWAPs, and then we retest and see a lot of failed selling. You can even see how the CVD dropped during this retest, right? And we get lower. We make a higher low on the CVD. It looks pretty much flat right there, but we have a lot of failed selling there. And we also had, if I'm not mistaken, let me double check really quick, a break of structure on the tick chart, which is this right here. And one of the things that was not convincing for me on this trade was the stop loss placement. So I was trying to like find like, because this idea was not convincing enough for me to take. So I'm like kind of okay with missing out on this trade, especially since like I feel like it should have been a break even trade if I took it. Because my main targets would be like at Asia high / London high. But if say you take it off the 3-minute close, maybe stop at the low there, you're not even getting a 1-to-1 with Asia and London high. So I don't know, maybe you're targeting some structure back here. I feel like that's valid. Well, yeah, maybe you had some for I guess marked out over there. I didn't. Um, but yeah, this trade idea, basing it off of if I'm this would be like in a perfect world where you know exactly where to take your trade, you know exactly where to enter and put your stop and put your TP. This would have worked out great. So this is the type of trade where you hold it for a long time without going break even. Um, Me personally, I don't think I would have liked to hold it this long, um, just because it wasn't convincing enough for me to do so. Um, but basically, ideally, you would have entered at 25, 3, 11, 25. So 25, 3, 11, 25. So during the formation of that candle, and your stop at 260. And the reason I'm saying 260, maybe even 262, is because that's the end of the low volume node, and I'll explain why 425 is the target here in a second. Um, but basically, the stop loss placement on that trade would have been based off of the low volume node that we invalidated. So this is technically a still low volume node. Some people interpret it as an inversion low volume node, or ILVN. I like to think of them in terms of ILVN, because I've learned about the IFVG strategy, and this makes sense to me. We created a low volume node, inverted it, and then we can respect it as a support or resistance level depending on which side it's um, getting disrespected through. But yeah, if you see that low volume node kind of ends at 262.5, so maybe 260 is your stop. 262 would be very tight stop, so you'd expect it to hold with strength. So it would make sense where you would have it there. This trade idea ends up playing out extremely well, and the reason why you would put your trade there is because like your TP up here is because at this point you now have the 45-minute IB set as the IB high set second, and you have your IB extension. So once you get through the, if you hold through this drawdown, you're like what, 5 points away from getting stopped out. This ends up hitting full TP after like two retraces. So if you held through that, good job, bro. Like, it's hard to pull that off. I feel like at times, especially if like you feel like you're not at the best mindset. If you're just a calm type of trader to hold through a lot of movement, then this is your type of trade. But yeah, that was pretty much the trade idea. Um, Low volume will getting disrespected. There's also an IFVG right there on the 3 minute. Break of VWAP, break and retest of overnight VWAP. And we had a sweep of pre-market low and true-day open. So some confluence is there. And then in terms of like high time frame, you're going against the resistance zone. But something I noticed is if you put this resistance zone, like instead of considering the full fair value gap, you consider after that first retest. I feel like it looks better in terms of longing into it. Um, but yeah, it might look a bit better. But yeah, this other trade idea, that's something that I thought about doing, and I'm like, nah, I'm gonna consider the whole area of resistance. This other trade idea is an IB play. So it's an initial balance play, and we had a break of H and London high. So if you see that as like liquidity has been taken there, no longer valid targets, that's also valid. You can see that as like, oh, we're accepting value above these. We're consolidating, maybe you're looking for this sell off. And then yeah. So I was looking at a 50-minute fair value gap that ended up holding here by barely anything. But yeah, this is what I was looking at, and at this point, honestly, ES made me want to hold back and not take the trade because the way NQ was consolidating up here, NES was like slowly retracing. I'm like, this does not look convincing, and the CVD was also dropping at this point. I'm like, it looks bullish because we're breaking highs, making kind of higher highs a little bit with a lower CVD, so that is technically bullish. But to me, I'm like, this is like weirding me out a little bit. I'm not convinced by this. So I was like, okay, let's see if we retest VWAP, right? We can mark out our like New York range fib levels. So we'll go ahead and do that really quick. So we'll align it so it looks pretty. Cool. So we've sweat pre-market lows, true day open, displays higher. Funny enough, funny enough, the original trade idea to trade from the low volume node that I had marked out, and I told myself this, if price retraces here, this is a great entry. And look at that freaking retrace. We stall out at the VWAPs, break them, sell off with strength. You can see clearly, just looking at the bubbles, looking at the CVD, strong selling volume coming into this low volume node. To me, I didn't have this low volume node extended, so I didn't have anything here on the bookmap chart. So sorry about that. It's my alarm to go to sleep soon. But yeah, um, this was a great play, and I'll explain why here in a second. But I didn't have the low volume node extended out, so I didn't see it reach the low volume node. I zoomed out on bookmap, and I'm like, there's no way. Extended it and saw how it perfectly retested. And this is the exact reaction you want to see at a low volume node, where we tap into it and quickly reject it. So you gotta be quick with these low volume node entries. You gotta be quick. And if they're aligned with context, momentum, and just your clear bias, and you have clear targets, they can provide pretty solid trades. At least from what I found in my trading. So yeah, that was the low volume node that I have marked out. Um, so somewhere around here, probably that 3 minute fair value gap, maybe a little bit below actually. Well, 5 minute actually. But yeah, this 3 minute fair value gap. So you could see this as like, okay, we have a 3 minute fair value gap right here. I'll mark this out like this. Um, so maybe you mark it out like this. It's a 3 minute FVG slash low volume node. It ends at 260. Like I mentioned earlier, it ends at 260, which is like kind of like the end of the low volume node. So even if you extend it to the end of the low volume node, it's still a valid trade idea. Still 34 point stop, pretty freaking solid. So yeah, we tap into the zero point 0.5 and the 618, so we can remove the 382, right? We can even remove the 0. 0.5, and we clearly see how we tap into the 618, immediately reject it. And your entry is a 294, because if you go to the tick chart at that time, we get a perfect break right here. Great V-shaped recovery, which is something a lot of people talk about, and I'm not entirely sure if this applies to the tick charts, but we get a clear break of structure. We consolidate a little bit, so continue holding off, and then immediately recover. So that's like the ideal entry. Stop at the wick is a very aggressive stop loss placement, but it would make sense. It would make sense if you're wanting to that to be the reaction. That's where you're gonna find the low inside the fair value gap. That's where you're gonna be like, that's gonna be your protected low. So you're pretty much like predicting that that's gonna be the protected low for the move. And that's what ended up happening. And at this point, when you get this entry, your 1 hour IB has set. So these extension levels have a lot of stronger statistic behind them, in my opinion. Um, I feel like the 1 hour IB is more reliable than the 45 minute IB, just in terms of like single breaks and all that stuff. But yeah, this was a damn near perfect entry. And I didn't take it because I didn't see that I had a low volume node right there. I feel like I should be more, actively analyzing. I feel like I am trying to take a step back a lot. Like I'm just sitting here with my arms crossed and watching price action. But I remember like the guy that used to like be like analyzing like, okay, what's going on? What's going on? What's going on? Which can be mentally draining, but clearly that guy would have caught an insane entry right here. And I'm talking about myself here. But yeah, if you don't like placing your stop right there, a stop at the end of that fair value gap makes sense in my eyes, and you would have caught a 3.85 R. The ideal entry, of course, right at that tick chart break, stop at the wick. That's nearly a 5 R. If you held to the 0.3, that's a 5.6 R, brother. That's an insane move. I think it's even more actually because the point 3 is a 443, so 5.62 RR. Pretty insane trade. Definitely the type of trade that I'm gonna be looking for moving forward. That sweep of True Day break and retest of a overnight VWAP, not convincing. Didn't have a clear retest of the low volume node. I feel like if we got it, then I would have been probably looking for uh, a setup there. But yeah, that's pretty much all that I saw today. There's two potential setups. This one being my favorite. Obviously, in hindsight, I'm gonna be like, this one was the best one because it got an insane RR, and I went straight to TP. It did take a while from 10:36 to 11:45, so you would have had to hold for like an hour. You would have had to hold for this retest of New York VWAP. You could have been break even here though. Take partials at the IP high, so maybe take a partial at your 3.58R, and then hold runners for 5.62. So that makes a lot of sense in my eyes. And yeah, it's definitely a great setup. Unfortunately, that I missed out on it, but hey, we live and we learn, and this is a great opportunity for me to learn. This is the setup that works. You know, I had at least two confluences in alignment, which I think I've spoken about this in the past before. How about how I at least want two entry confluences in alignment? In this case, it would have been the IB, and it would have been the New York range fib and a low volume node, even a 3 minute FEG, um, which I've proven to myself in the past that 3 minute analysis is pretty good as well, as like my lowest time frame. And it's also like an alignment with the IB. But yeah, moving forward, it's a great opportunity for me to learn, kind of reinforcing like, these setups work. These setups are the setups that you were like, there's no way I miss this. Like, there's no way I see this play out in front of my eyes and don't take it, because it's a great setup and I should be um, like nonchalant when taking it. Like, I should not be hesitating on taking it. So yeah, overall, pretty great setup, and yeah, um, just unfortunate that I didn't extend out the low volume node. So it is what it is, and yeah, we'll go ahead and lock in, because we also got a new eval right here. So the 50K, right? Got a new one with the offer that we're running with no activation fees on Top Step. You can see there's no trades taken, empty calendar last month. So I didn't get it last month, and yeah, that's pretty much it. And then the 100K account, this is pretty much done for. I have 750 of drawdown left, and the rebuild date on this is, I think, this week. I didn't see it as a possibility of me passing it. I want to pass an account in a consistent manner, and I don't want it to be too costly. I feel like if I continue to trade this, considering we've just started with December, we're probably gonna get like 2 weeks of tradable price action. Me passing this within 2 weeks doesn't seem reasonable. I would also have to for sure pay the rebuild fee, and me passing in 2 weeks from drawdown all the way to profit. So like, I'd have to make 5, so 7,7800 bucks on it, which sounds pretty insane. So in my eyes, it's like, yeah, I don't want to, like, it feels like a lot of pressure, and I don't want to pressure myself into this. And the 550K, I'm more comfortable in just trading that one. So yeah, just overall, it feels more relaxed, because even if I do pass it, it feels really expensive for me to get the 100K account, and that's just me. That's just a matter of me with my finances. I just feel more comfortable paying the fee on, well, not the fee, the subscription on the 50K. Like, if I don't pass it within the first 2 weeks of December, I'm okay with that. I'll just pay the one, the the rebuild on January, and then I'll pass it then. I'm okay with doing that. But with the 100K, it's like, I'm gonna have to rebuild this week, potentially another week, and then if I pass it, it's the activation fee. So that's like 3 months It just feels like a lot for me to just get a 100K count. But the 50K, it just feels different. I don't know what it is. It's just, it makes sense in my mind. So, yeah. Anyways, that's me yapping about my thought process in terms of buying evals. But other than that, that pretty much wraps up the trade recap for the day. Thank y'all for watching. Please leave a like, comment, and subscribe. I really appreciate it. And yeah, thank you for watching. I really appreciate you guys. Hopefully, y'all enjoyed. Hopefully, this was insightful, educational, and entertaining. As that's all it is at the end of the day, for entertainment and educational purposes. So, yeah, hopefully, I'll catch y'all tomorrow with a banger trade. And yeah, I'll see y'all in the next one. Peace.